Hey traders, happy Wednesday, happy New Year. Hope you guys had a fantastic holiday. As always, nothing in this presentation shall constitute a recommendation. The buyer selling security, trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. All right, again, happy New Year, everybody. Thank you for the well wishes. And I did have a great vacation. I am back. So starting tonight, we'll be doing nightly videos every night. We'll have one tomorrow night and again on Sunday. I did get a couple questions about the platform I use. Any brokerage firm is fine. I don't recommend any particular one. I like using profit charts at Thinkorswim. These little brown arrows are the dividends. That's what that means. And again, this is a daily chart where every candle represents a single day in the market. So let's kick off here with the Dow. It was only up a lousy 12 cents today, but at one point it wasn't looking so good. We were looking as if we're going to roll over to start the new year. But what happened is we gapped down, which is the open down here, and then closed at the highs of the day. By 2 cents, we bullish engulfed the previous day, meaning open down here and closed up here, and we traded below and above the previous day's candle. That is usually bullish. However, volume today wasn't that extraordinary. It was only 5.2 million shares. Not terrible, but not amazing either. The question is probably on everybody's mind, is the bottom in? I have no idea. No one knows. All I can do is look at what the chart's telling me, use my experience from following the markets. And while we had a gap down here on Christmas Eve, then the day after Christmas, that was a massive move. We are staying above the blue line, which now is a 5-day EMA. We're staying above it, but the volume isn't returning. I do not feel as if we had a capitulation type bottom where things just feel so ugly. The old saying of throwing the babies out with the bathwater, throwing every stock out for any reason, good or bad, just gone. I don't see that, and I didn't feel that either in the market. I still get a sneaky suspicion this is not over, and we may go back down there, even break them, and maybe then we finally get a bottom. My long-term view on the US market is still bullish, not based on fundamentals. I know some of you guys watch my videos every night, and then we just had a bunch of new folks say over the holidays they found the YouTube channel as well, and they're watching. I think the US market goes higher for other reasons than just pure economics. I think it's a safe haven. I think there's other parts of the world that are, in serious trouble, and it's attracting capital, which is what led it to go as high as it did in October. Now we're just getting a correction, and maybe we drop 20, 30, 40% from here. That's very possible. I prefer to trade what I see, and I can still have an opinion, but trade what you see, not what you think, because that can get dangerous if you're not careful or if you don't understand hedging properly. I do understand hedging. So if you don't, it's something I would definitely, tell you to research, learn more about options. All right, so where do we sit here again? Diamond, we're above the 5-day EMA in blue. Targets the 20-day. That's just an exponential moving average, 20 days worth of data. That's a natural point to check it out. We get above there, then we go up to that coagulation of the 50-day SMA in orange and the 200 SMA in purple. Those are institutional moving averages, big deals. That would be the target. And then we get above there, we go back to the recent highs. It's a long ways off. Like I said, my gut's telling me we are not done yet. But right now, 5 days out, the bulls have the edge. The moment we're above it, 5 days out, we're bullish. We get below it, 5 days out, we're bearish. Well, we're already below the 20, the 50, the 200. So all the other time frames are bearish on the daily. Only the 5-day is bullish. Now, if I go to a 5-year weekly chart, just to give you some context again, we were rejected, not a good sign last week. So far today's 1 day, we're getting back up there, but nothing has changed on the weeklies. Technically, the weeklies are bearish too. Let's go back into a 1-year daily and take a look at the SPY. All right, the spider's above its 5-day as well. Same thing, target 20-day, then back up in here. Previous lows, and the 50-day is going to be dropping down in there too. Same sort of thing. The NASDAQ, the Qs, up 0.4% today. We did have our big plunge. We're getting back up there. We're getting close to the 20. Above the 20, we go back to the 50. Go to the IWM. You sort of guessed it. All the same thing. Target 20-day in red. Back up to the previous lows, which already coincides with the 50-day. That's it across the boards. Now, if we go to $VIX, the VIX pretty much, I would say, mini crashed today, 8%, dropped over 2 points. We zoom in. We're down at 23. Fear has definitely quickly come out of this market. It's 5 straight down moves. We did have a big opposing bars here. That's from a stock market bull perspective, you like it. But if I zoom out here, we did get a big surge outside the upper Bollinger Band in green, but we never got the massive surge. And that it just makes me wonder, one more push, one more freak out could get us there. So we really never had a massive freak out move on the VIX. Sort of happened on Christmas Eve, but that's typically not a day that it's going to happen anyway. So just heads up, I'm just not buying it all. But again, short term, the 5-day moving average is bullish on the equities. All right, so where's the money going? If the money's coming out, is it going into bonds? Well, if you take the absolute low from November, bonds have had a pretty nice move, 10% via TLT, which is 20-year plus. It's really a 30-year bond, but it's 20-year plus. You go from 112 all the way up to 122. Your target, if I go back out 2 years on TLT, is up in this area. So a little bit more rise in bonds. We start getting above 125. Let's go back 5 years. That is a breakout. Above 125, if equities are still selling off, maybe this thing accelerates further. But bonds are a joke too. This thing's going to blow up like the mother of blowups. But when? Not yet. It hasn't happened. But we get above 125, then the target's up there in the low 130s. So we'll keep an eye on that. I would be surprised if we get up there and break through it and then stay above it. I would expect some sort of reversal, but we'll see. If the market's melting down enough, maybe some money's going to go over to GLD or TLT bonds, but it hasn't gone there in droves yet. Now, if I move into GLD, which I do have a bullish position in now, this is the weekly chart. We gotten above the 50 period. It's moving higher. If I go to a 1-year daily, now each candle represents 1 day. The target right now is up around 123.50, about $2 more, and then back up into this old trading range in the mid to upper 120s. GLD is one of those seasonality type plays that the last week of December, first week of January is usually pretty well. The last 5 years, it's been spot on in a row. Nothing is ever going to work all the time. But I mean, geez, if you were following GLD since it got above the 200-day here, those option plays, I think out to April, we did an educational session on it in a paper trading account, like always. They're already up over 20+%. Right now, GLD is moving higher. Just keep in mind, if I say I have a bullish or a bearish position, it doesn't mean that it's a great position. It could be the worst position in the entire world. I am not telling you what to do. It's just from a disclosure perspective, okay? But typically, GLD runs up in January into February. So you know what? You want to have some fun. Get a paper trading account. It's free. It's fake money. Follow along via the ETF itself or something in the options world. And then you can see how these options gain value and lose value as time passes and as the stock moves up or down. Typically, what I like to teach, if let's say we used hypothetically a March, April, May, something like that, at the money would be a great paper trading example. Something shorter term, of course, could be considered and longer term. But if we just play a seasonality pattern that goes into February, sometimes March, a couple months is generally enough. So again, what you could do, think of a shorter term option, a medium term option, and a longer term option. Do all three and then see how each one gains value, but also loses value due to time decay. And then you might find one that you like even better than the next one or the other one for the next time. So hopefully you understand what I'm saying. Again, educational purposes, perspective. If you have any questions on that, feel free to let me know. All right, let's keep moving on here. Let's do casino stocks. So gold's moving up a little bit, bonds moving up a little bit, market's moving down. Las Vegas Sands and WYNN. Here is LVS. So there was some news out of Macau today, and these guys are finally getting pops. I love stocks that are in long downtrend. This is June all the way into December. So let's actually go to end of October, a lower low in November, another lower low in December. They're not a whole lot, but each one was sort of like a test. It sucked some people in, freaked some people out, then there were bounces. Today's bounce, though, was pretty significant. Volume, good, not amazing. Closed near the highs of the day, though, and that's what I want to see. We finally got above the 50-day here, and then it quickly petered out with the whole market sell-off. Now we're getting a surge. If I wanted to consider being bullish on LVS, what I could consider potentially is a trailing stop as the red line, which is the 20-day EMA. Maybe I could do a half position now, and then when we break out above this previous double top around 57.50, maybe consider establishing the second to complete the full position at that point. Target would be the 200-day just because of an institutional moving average. And then if we have a 200-day, there's a gap fill up at 72.50. If I was doing a stock play, I would probably consider the same thing, a 20-day EMA as a trailing stop. But the end of the, like a last resort stop would be the closing low down there from Christmas Eve when it was down at 47.50. Now, if we look at WYNN, and of the displays over Christmas in Vegas, Bellagio had an amazing display, which is MGM. WYNN had some nice stuff. The Venetian, the Sands, so-so, for those who care. But here is WYNN, up 5.55%. Nice pop in volume, but not amazing. Here's a low. We basically held the low, and now we're moving higher. These can be considered double bottoms. It doesn't have to be structurally precise. It's close enough for horseshoes. The one thing we didn't get above, though, at the 50-day, yes, we did. 11 cents. We got above the 50-day by 11 cents, so that's good. The immediate target would be the high right here at 120, and then above 120, all the way up there at the 200-day moving average. So from a distance perspective and percentage move, it looks really interesting. Trailing stop, 20-day EMA is a tight one right now, or the closing low from, you guessed it, Christmas Eve, the day before Christmas. I got questions about Tesla. I don't always cover it. And the only reason I don't is I'm not ignoring anybody, is there's not a whole lot to talk about when a stock is incredibly range bound. And this was the previous highs I had drawn in up around 380, the lows of 250. Big range, right? Well, we got up there coming in ahead of Christmas, and then we stopped on the dime, and then we dropped 70 points. It's amazing. It's going to work till it doesn't. It's not what it's not a pattern I look to trade off of a whole lot, but I can tell you what, the one thing I do like about big trading patterns is this. When you get a low and then you get a big volume move to the upside, I can consider bull puts, credit spreads. When we get up to resistance and we're at highs and then we roll over a little bit, then it's credit spreads up here. So bear calls up here, and bull puts down here. I think they can work fantastic. Now, the caveat here was earnings was a couple days away. You didn't know what was going to happen. I'm really not a big fan of initiating credit spreads in front of a fixed news event that can send the stock soaring or crashing, right? So this one wouldn't have worked because of earnings, but if you take out earnings and use this from a teaching perspective, there was the pop. Boom, bull put idea. Now you're up here. There is no imminent earnings. We're rolling over. Now bear call up here. Right now, you're in the middle of the range. So all the commentary that I've been giving you for the past couple months, many months now on Tesla, it's still in play until we break this range. We're right in the middle. So it's eeny, meeny, miny, mo, right? Up a little, down a little. I don't like that risk reward. I like when we get the big turns. And then two other things to keep an eye on. Here is Brazil. We talked about this sort of double bottom. It's also a cup and handle, and today we surged 6%. If we take out 43 bucks on a closing basis, we go back up to the double top around 45 or so. It's not a huge move, maybe 10%, not bad, but look how we are just basically playing with this 200-day moving average. Backtest, 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 and now we're launching. Today, actually some pretty decent volume on EWZ. From a stock perspective, again, always paper trading. If I get below the 200-day moving average, that would be enough to stop me out. Now you can see before it's not perfect, but you got to pick something. So if you're not going to go with the 200-day, for example, maybe you go 200-day minus $1, something. I just couldn't buy stock and say, let's see what happens, because before you know it, you're a deer in the headlights. You're going to end up on somebody's dinner table, and you're going to be way down here. So I like the move. Somewhere down here would be the last resort stop. Otherwise, maybe a 20-day EMA as a trailing stop. And if you watch these videos enough, you know I like that 20-day. It works more than it doesn't. It is surprising, I think. How about one that is breaking out? This is Mexico, EWW. The 200 days been broken today. My only real issue, the 200-day, the 50-day SMA in orange has been broken, was the lack of volume. If you just forget about what the volume was, just look at the bar. I would love to see a volume spike on a breakout. We didn't get the spike, but it is the first day of the new year. Maybe some folks are still on vacation, blah, blah, blah. But it broke out. Target, previous high around 45.5, then up to the 200-day. So if I wanted to consider being bullish on this one, I could again use the red line as the trailing stop. Oh, one more I forgot about. Google. I'm watching Google here. Overall today, there weren't a lot of big name stocks that we typically follow on the move. It was a lot of lesser known stocks, but here's Alphabet, or otherwise known as Google. You can see once we got below the orange line, we tried to come back up in October, rejected. Came back up, we were essentially really only above it for about 2 days, the, the 30th of November, and then we hit the 200-day and then closed near the lows of the day on the third. Bad sign. We rolled over, went to new lows, put in an inverted type hammer, which is bullish, and look what happened. The last 3 trading days, 50-day, 50-day, 50-day. If we close above the 50-day, I think from a technical perspective, the 200-day is the immediate target. This could be a great paper trade idea to use maybe a 1 month option. Now there's going to be massive time decay, which is why it's great to learn that way. But basically just taking a couple days, maybe a week or two, tight move to get there and see if that were to pay off or not. But anything above the 50 days to me is just not worth it because it can't get above it. I mean, since we got back below it, the beginning of December, we've had 1, 2, 3. I mean, look at that. Let me zoom in closer. Just look how precise that is. 1, 2, 3, 4, 5, today's 6. You can call it random, but I don't know. An institutional moving average is sort of, it's like, don't touch me, get away. You're not coming through. It's a closed door. So when you break through that door, you break through that ceiling. That usually allows more pressure, more buying pressure to come in and send it up to the next resistance level, which coincides with a reversal, that black candle. All right, long video. Gosh, I didn't expect it to be this long. So we went over the major markets, gold, bonds, some casino stocks, and also some Brazil and Mexico ETFs too. Again, Happy New Year to you and your families. I wish you guys nothing but the best. If you have any questions, you can do it on the YouTube channel or email me at cs@markettamer.com. Take good care, folks. See you in the next video.